Who wants a pot of coffee? I just made coffee. You want a cup of coffee? Sure, there you go. Who wants coffee? Anybody else want coffee? Who wants coffee?
And now it's time for the man with the caffeine, the new tropics for the brain. It's Coffee with Mike. Hang in, hang tight, grab your cup, and let's get this started. Hey everybody, welcome back to Java Chat. It's Coffee with Mike, and I get to interview somebody I've been, with a specialty I've been actually trying to get to come on to the podcast because this was important, and it has to do with cash flow. Her name's Rachelle Calina. She's a CPA. Rachelle, thanks for joining us on Java Chat.
Thank you for having us.
And she's got her coffee just like I do. Good. She remembers the rules. It's a wonderful thing. So where are you out of?
I am based out of Seattle. Right now, I'm currently in Northwest Arkansas, though, kind of riding out the COVID-19 storm.
Oh my goodness. Probably a good idea considering that's where everything started. That was kind of our ground zero, if I remember.
Oh yeah, it was, I want to say early March, all the offices started closing down, and, there had been some other instances happening before that made, not related to COVID, that it made me a little bit uncomfortable. And I just had that feeling like I got to get out. So I got a plane ticket on 12 hours notice and left, and grateful that I did, because definitely a lot more stuff went down in Seattle after that.
You literally like end of February, right before everything.
Yeah, like in mid-March, mid-March. Yeah. So
Good call. It's nice to be able to have that foresight every once in a while. You're just kind of looking at it going, no.
Something is gonna happen here. Gotta get out.
We packing a bag and flying.
Exactly.
Okay. So, and how long have you been a CPA?
I have been a CPA since 2010. So I guess that's 10 years. Holy crap.
Yeah. Time flies when you're having fun.
I know. Exactly.
What interested you in finance? I mean, accounting is not exactly, forgive the stereotype, accounting isn't exactly the most exciting profession on the planet, but it's freaking important.
I would say it's a combination of things. When I actually started school, my initial major was education. And that's what I wanted to do. I wanted to help people, be a teacher. And I just, in doing the classes, it felt a bit overwhelming to have to do lesson plans day after day after day after day.
Oh yeah, I can see that.
Especially myself as an introvert, that's so much energy, you know what I mean?
Right.
But I had taken an accounting class as a practical art when I was in high school. And I remember when I took it, I was like, this is so easy. Like, this just totally makes sense. I'm a very linear thinker. It just it, completely made sense to me. And, so I decided to get my major in accounting. I wasn't really sure that was what I was going to do long term. But what I found is that I'm still able to help people by doing this. And that's
Absolutely.
really what my end goal is just to be as helpful to society as possible. You know
Right. Which leads over to the fact that you're also a small business financial coach.
Yes, exactly.
So you're able. So you're still teaching. You're just not doing the daily lesson plans, but you're still teaching.
Exactly.
And since then, how many people have you been able to help?
I mean, over the last, I started my own business back in 2013, and we've had, I'd say with having tax clients and all of that, we've had well over 600 people in and out the door.
Wonderful.
I'm always really surprised. And again, I think we all live in our own little world where we think everything is easy. Accounting has always been really straightforward and easy. My brain just works that way. And it's always nice when you're able to take someone's financials or take someone's tax return, take a look at it, find a better way, and be able to get them more money back, or find a way to cut costs, or find a way to make it better. And again, as doing it day to day, it's always really hard to think in terms of this isn't something that everyone else has,
right.
mentality to look at.
That's true.
So,
I'm a classic of that. I joke sometimes. I keep saying I'm OCD and ADD. It has to be perfect, just not for long. So for me, when it comes to logic, it's great, but at a certain point, I start losing it, and the linear
and I think it's
becomes
the
nonlinear.
Yeah, well, I think it's the things that you're interested in, right?
Yeah,
And,
yeah.
you know, like I had a client yesterday I was talking to, and he kind of, after about 45 minutes, was like, I got to excuse myself. I got to get out. And, you know, he's a very smart guy. He's a forensic psychologist. And he's like, I love the details, but not in this.
Yeah.
I don't want to see the details here. This is just too much.
Yeah. Yeah. No. And I'm one of those guys that because I'm an entrepreneur like you, I have to look at it, and I have to have at least enough of an interest in it, you know, because we have our marketing agency that I have to pay attention to the numbers. So, you know, it's like when I was not doing what I'm doing, I hated getting up in the morning and looking at my bank account, you know, because there was always that, what did I miss? Or where am I at now? You know, or did I break my zero line? You know, and it's like, it's a stress. Now every morning it's just like, no, it's a process. This has to be done. It is what it is.
Exactly.
I think maybe there's an emotional attachment portion to this, to the whole thing.
And that's exactly what I was going to say is I think
got it. Okay.
there is, like, money is just a very emotional thing for people. Like, I mean, when COVID-19 hit, you know, I essentially had to move from proactive accountant to therapist really, really fast. And, you know, some people were just, you know, and just like in life, some people were just like, you know what, we got this, we'll figure it out, blah, blah, blah. And some people were literally emailing every day, freaking out. You know, they saw something on the news that sounded like this was going to happen. And it's like, right, but it hasn't happened. And I can't advise you until it's law.
So, so your next degree is going to be a PSYD, correct? That's what.
Probably, yeah.
It's like bartenders need one of these degrees. Anybody who's in finance needs these degrees.
Yes, exactly. And I think that's one reason that I think accountants get such a bad rap a little bit is because money really is very emotional to people, but accountants tend to be, like, again, very like non-emotional, linear thinkers, and it can often feel like there's not a meeting of the minds when it comes down to this kind of
absolutely. I learned
stuff.
I learned a long time ago from a good friend of mine who was a broker on Wall Street. He said, "Do you understand what money is?" And I said, "Yeah, it's the means by which commerce runs." He goes, "Go deeper." I'm like, "What do you mean?" He goes, "What is money?" This is a piece of paper that's backed by basically credit. He goes, "Go deeper." I'm like, I don't understand. What do you mean go deeper? He goes, "What is money? What do you feel when you look at money?" I'm like, "Oh, could be happy, could be anxiety." And he goes, "Why is that? What is the emotional attachment to?" And I sat there, we danced around for a minute. And he goes, "Okay, listen, money is an agreement. That's it. If you're having anxiety over money, it's because your agreements were overextended. You shouldn't have done it." He says, "Before you ever make an agreement again, think about that." Yeah. And I think a lot of people, like the ones that are emailing over and over, they're angsty over the fact that they made an agreement and they're not sure how they're going to honor that agreement. They're not sure how they're going to make it to the other side of that agreement or what have you. So having somebody like you, somebody that understands the linear process of it, can probably help them understand that the agreement is still valid. Mm-hmm. It's how the agreement needs to be executed from that. Does that make sense? Is that, do you think I'm on path? Okay.
It totally makes sense. And I 100% agree. And, you know, I would just caveat that I also think that, you know, money is security. Yeah. It's, you know, if we look at like the hierarchy of needs, it's one of the very baselines.
Yeah. It's bottom line. It's definitely bottom line. Yeah. I agree. So in the midst of all the fun things that are going on right now, and not even including COVID though, as a small business financial coach, consultant, mm-hmm. What are some of the trends that you're seeing that small business owners commit, that are the wonderful faux pas of business that they need to really start paying attention to? Because I think, and we kind of talked about it in the pre-show, I'm sure this is that's going to be one of the issues, but there must be more than that, because what is it, 82% still are failing because of certain things? What do you see?
82% of businesses that fail is because of cash flow issues. Yeah.
So when we're talking about cash flow issues, and I want you to run wild on this. What have you
Mhm.
seen that has been just like, are you kidding me? And what have you seen that has been like, oh, this is easily fixable. Here's a tweak.
Right. So I think in reality, the biggest issue that I've seen is people making business more complex than it actually has to be. I'm a really big proponent of like, okay, you want to start a marketing business. Great. Pick out 1 to 2 things that you're going to do. Don't try to do everything.
Right.
And I've definitely seen that. Like I had a client previously that, they did like, more like promotions and street promotions, things like that.
Right.
But then they also were like, well, but these people also want social media. So then he had to hire somebody to do social media. Even though he wasn't really making money off of it, it was basically just a kind of like a way of getting people into the door. And then, and then they wanted to start doing this, but that meant doing, hiring other people. And
Right.
I mean, it was $1 million business where $800,000 was going towards cost of goods
Costs.
sold and people.
Yikes.
And it was so complex. And I mean, every time, like I would meet with this guy every single month and we would be having a conversation, how things are going. And it literally just it was therapy for him. It was just him griping and complaining about how his employees are running ragged. He doesn't have time for this. He can't seem to do that. And it's, we basically was like, dude, you need to like scale back and just pick 1 to 2 things and get really, really good at that. Just be simple. And like the more simple your business is, the less employees you need to manage it and the more scalable it becomes. Like it's just doing too many things. And honestly, it's something that I saw in my own business as well. When I started my business, it wasn't like okay, now, Honest Buck Accounting is now open for business and everybody can come. It was like, oh, well, I have a job, but I can, I like to travel. So I'm going to do some bookkeeping on the side to make a little extra travel cash. And then
Right.
I got this person and then I got this person. And before I knew it, it was like, holy crap, I need to quit my job. I have all of these people that want to hire me. But the problem was because it really didn't start as an actual business where I had a business plan and I knew what I wanted to do, I had zero focus.
Right.
Essentially,
Right.
if somebody was like, hey, I want you to do this accounting thing, I was like, okay, and
Yeah.
it took several years to realize, oh my gosh, I'm running myself into the ground because I am not focused. Like I'm
Right.
literally just taking anybody who wants an accounting thing done. And so like we did have to really like about a year ago just say like put a stop and say, hey, okay, we need to refocus and this is what we're doing and this
Right.
is all we're doing.
And
And yeah, it created some problems, but the truth is my quality of life is so much better now.
Oh, I bet when you have, and I think that actually falls under the one of the first questions I usually ask is, what's the best piece of advice to somebody that's got a small business? I think you just gave it.
So stay simple, stay as simple as you possibly can. Because really, like when it comes, I mean, like we were talking about in kind of pre-show is, what's the new hot thing? What's this? What,
Shiny
like,
object
what's the new
syndrome.
trend?
Yep. All
Right,
day
exactly,
long.
the
It's
new shiny
crazy.
object. And I kind of feel like it's my analogy that I like to use is like accounting, or not even accounting, but business finance is a lot like weight loss.
Yeah.
Like it's a really simple formula. You have to burn more calories
Then you take in.
than you
Yeah.
take in.
Yeah.
But there's all these like shiny objects around it that don't work.
Yeah.
You know what I mean? Like really, I mean, some things might work, but really most of it is just fads, long-term doesn't work.
There you
The
go.
same thing with business, financials. You need more money to come in than is going out.
Correct.
And there's all these different ways to look at it, but the core is you need more money coming in than going out.
Yeah.
So like, what are the big expenses? People are the big expense. And again, the more complicated you make your business, the bigger your business gets, the more people you need, and the more cash flow becomes a really hard thing.
Yeah, you don't want to create. Well, most people that decide they want to open a business that I've come across, and this is from the angel investment side of things that I used to see. That was always one of the things we wanted to see is how the financials look. Does it make sense? What's the business concept, and what's the mentality of the people that are going to be running the business? Are they running it to create a solution that they can walk away from later? In other words, is this a business or is this a baby?
Mm-hmm.
If this is a baby, you're not going to go very far. It's just trend where we were in tech. That's just, if it's your baby, you're not going to want to let it go when it's time to let go. You're going to be stuck in it. And once you hit the top of the bell curve and it starts going downhill, all the anxieties and all of the things that you expect to go bad are going to go bad, because you now have a job. You don't have a business anymore, because now you've got, like you said, you have people, you have other expenses that you have to worry about, and you have to figure out how to get more cash flow in, which usually means hiring more programmers and hiring more coders. And that's two different things, what most people don't realize. Programmers and then coders and then other people that help with design and graphics and all that stuff. And if you don't have those skills or the time to put into it to make that work, you got yourself another job. Why in the world did you start the business in the first place? So looking at that, that's, in fact, I need to write that one down. Focus. Biggest one. When it comes to, who do you work with mostly? Do you stick within a certain niche when it comes to accounting?
On the accounting side of things, I work primarily with childcare businesses.
Nice.
So preschools, daycares. Again, being a former wannabe teacher, it's just more of a passion than some other businesses out there.
You're still a teacher, though.
I know.
I think, it's interesting. Excuse me. I think it's interesting that most people believe that the term teacher belongs to somebody who's in a classroom. And I'm sorry, but I just don't agree with that. Teachers are revered in my mind. I had some great ones. I had some not so great ones. But anybody, and maybe it's mentor, because at the point of the specialty that you're in, maybe it's mentor. But it's still a teacher. It's somebody who's bringing information that other people don't have. I mean, you take a balance sheet to the average Joe.
Mm-hmm.
How much deer in the headlights are you going to get off of that one? Exactly. That's an all-day deal. But you hand it off to somebody like yourself, you can look at it and go, oh, here's your problem.
Mm-hmm.
You're missing this. You're not doing this. You're in need of more of this. You need to do this. On average, this ought to be fun. On average, when you come to a business, how well are their sheets when you're looking at balance sheets or when you're looking at accounting reports? Are they anywhere near where they need to be?
So it depends. If we are their first accountant, absolutely not. Nowhere close. If they had
You're never looking at my sheets. You will never see my sheets.
If they previously had an accountant, then usually it's a fairly straightforward kind of pickup. But yeah, if they've never had an accountant before, it's always a little bit, I wouldn't say terrifying, because again, it's a puzzle for me and I like to tear it apart and put it back together in the right way. But yeah.
So when you're looking at a business, and you're obviously looking at it from the financial standpoint, what are the things you're looking for the most? And the reason I'm asking this is because some of our listeners that have businesses can go back and start picking apart their own, hopefully, and figure out maybe this is what their issue may be.
Mm-hmm.
What kinds of things do you look for?
So the first thing I always look at, and I'm afraid to say it after your last comment, but the first thing I always look at is the balance sheet. And that's an old auditor trick. So I actually started my career as an auditor with Big Four accounting firm. And what we learned is if the balance sheet is wrong, the income statement is wrong, because those two financials are 100% tied to each other.
Oh yes.
So like if you have like a weird, balance somewhere in the balance sheet, like, so let's say like accounts receivable, let's say that you only have $10,000 out there, but for whatever reason your accounts receivable balance is $90,000 because something, that the income statement is wrong.
Oh yeah.
And that's where I always start, is just pulling apart a balance sheet.
Is there any kind of resource that you know of that people can actually, I mean, I oversimplify it. Everybody's got Google, go to YouTube. But you have people out there that also sometimes they overcomplicate things to try to simplify things, if that makes sense.
Yes.
Where
Yeah.
would be a good place for somebody to start if they just don't know?
So first I'm going to kind of baseline and say, if you don't have an accounting system, I absolutely recommend using QuickBooks Online. It's the easiest. It's,
I got that.
the most robust. For the
It's one
price
check
point,
mark for me.
Yes, exactly. It's awesome. Like, there are a lot of other, systems out there, but I have just not found that they're quite as user-friendly, quite as robust.
Absolutely.
With that being said, QuickBooks does have a really great 2-day course where they will literally walk you through everything you need to know to have your financials in order.
Sweet.
We had a couple of our new employees go through it, and they both kind of agreed, hey, I think this was actually a little bit too low level for us. We already kind of knew this stuff.
Right.
But it's definitely, they were like, yeah, we definitely recommend it to any client who literally knows nothing about accounting or just has the minimal amount of knowledge.
Sweet. Awesome. Trying to think what other things, when you're looking at forecasting or budgeting and things of that nature, what kind of things should people be looking out for? I mean, I know our biggest one that we were talking about was cash flow, but what other things can they be looking out for?
Oh, that's a really, really good question. I'm a really big fan of KPIs.
Oh yeah.
Yeah. And so one of our little secret weapons that we like to use is a system called Fathom HQ.
Fathom?
Fathom. Yep. Fathom HQ. And it connects directly into QuickBooks. And what's amazing about it is it shows everything about your financials in pictures.
Oh, nice.
And you're able to set up KPIs. So if you're okay, well, revenue, I want to be at $30,000 a month. You would set that as a KPI. And when you look at Fathom, it's going to tell you, last month you were at 25,000, you wanted to be at 30,000, here's the variance. And you can do this, and you can create your own KPIs as well. So if there's something important to you, for example, for us, one of our big metrics that we like to look at is what is our average revenue per client that we're working with?
Right.
That's something I can set up in there. I'd have to add a little math equation, and now I have that as my KPI. And again, it's going to tell us, and really, it's very visual. If things are good, it's green with a check. If it's bad, it's an X red. But what I really like about this system is that it also has this thing called goal seek. And so it actually will tell you, based on what information you put in, where you want to be versus what actually happened. It'll tell you okay, if you want to fix this, you need to raise your prices by 10%.
Gotcha.
Or you need to, decrease your variable expenses by X amount, or you need to increase your volume by X amount. And it tells you all of that information. And it's
cool.
It's so very clear way to see it. And I really highly recommend it for anybody who's not an accounting person, because all of the reporting is so visual versus sitting there staring at a spreadsheet.
Yeah, I think
that the bottom line actually tells you, because that's the problem. And something I talk to my clients about a lot is, you look at the income statement, you look at the bottom line, and they're like, okay, I made $10,000. Why isn't there $10,000 more in the bank? And it's because there's these weird things that happen where things are on the balance sheet. They're actually a payoff of debt versus an expense. So, so you don't really see what your true cash flow is by looking at the income statement.
Exactly.
But most people just glaze over looking at it anyway. So anything that can just show you in a very visual way, I think is a huge win.
Considering how many entrepreneurs are heavy creatives and visual, that's beautiful. I'm actually going to go look at that after this. That's a good one. You brought up an interesting point on pricing. And this has always been a grumble of mine, if you will, only because I'm familiar with the coaching and consulting world, where they have some pretty hefty price tags. Mm-hmm. And they make some big promises. And there's a bunch of them out there that, unfortunately, the word charlatan comes out with, because they just don't provide the value. But that said, if you have something of value, how do you, especially if you're talking about service-based businesses, it's hard to sell an intangible. We do. And the tangible with us is data, because we work with AI, machine learning, and all that kind of stuff. So it's data targeting. That's still a service. So when you're considering pricing, how do you approach that from an accounting standpoint? I mean, what are you looking for?
Oh, that's a really good question. I mean, obviously you can, take a look at like what the average in the market is, and I know I 100% agree, and I'm going to kind of like probably shoot myself in the foot a little bit by saying all of this, but like with coaches, business coaches, the typical tends to be $1,000 to $2,000 a month.
If that's the typical, I'm sitting with some real high level dudes. I can tell you that right now, because that's nowhere near what they charge.
My arena, typical,
Okay.
like
Okay.
1,000 to 2,000. I mean, obviously, I know there's like people who are, paying a lot more than that. But like, let's just say that. I would say as a coach or as a service provider, you want to price yourself within at least the average. You don't want, because like me personally, like I could be like, well, I'm going to spend 4 hours a month with this person and I want to make like X amount of money. So that's about $800. So I'm just going to say $800. Well, the problem that can come from that obviously is that people don't value your services as much if you're lower than everyone else. And a lot of times, weirdly, when people don't value your services, they tend to walk over your time.
Yeah.
So you definitely want to know what is out there so that you can price yourself around it. But I think you also just have to step back and go, okay, like you said, we have intangibles. Okay, what is my average? How much, when I'm working with somebody, how much do we raise their revenue typically? How much do we cut their costs typically? How much do we streamline their business? How much do we improve their employee retention? All of these things, how are we doing it? And if you can't look at your price tag and look at those metrics and feel good about what's happening, then you probably shouldn't be in business.
Right. Right. No. And I agree. One of the models that we do and did actually a lot before was a percentage of revenue while covering costs. In other words, we'll help you get there because you're just a startup. You don't have the golden treasure chest sitting in the back room that you can pull a gold coin out of. We get it.
Right.
But you need the service, because if you don't have the service, I don't care what you do, you're not going to get found. You're not going to get your branding, and you're just not going to get any clients. I mean, unless you want to go out and hump it every day, cold calling everybody. And if that's you, wonderful. That don't get me wrong. That's still effective, believe it or not.
Right.
Even with the new stuff that's coming out. But if you don't and you need help, we're at the point of, this is how we can do this. Help us cover the cost of things. Help us cover the cost of some of our employees. We'll leave the profit out of it for now. And then down the line, as revenue grows, you give us a percentage as if we were part owner. For us, that's worked in the past. We're kind of doing that now with another client that we have. Everything else is, mid-range of what is expected in the marketplace. So I'm dead on with you on that one.
And I think, honestly, the scary part is that it goes back to people's psychology. Like, yeah, we can say like, okay, we'll get a percentage of what, you are doing, where we're able to raise you up, but it's so dependent on the person.
It's dependent on the business succeeding. Yeah. And that's the only reason.
That's really terrifying.
It is. Don't get me wrong. You got to remember, I'm kind of a, they say when you take a bet, you try to hedge it as best as you can.
Mm-hmm.
And in the case of looking at a business going, you got a great product or service, which what we used to do in angel investing, literally, we would come in and bring our team of people. I'd be the guy to take care of the marketing, and there was another guy for operations and for legal. We'd fill the holes in, and then we would push to make it a success. I don't do that as much now. Like I said, we're doing it with like one client right now.
Right.
But it was an option at the time to do, because we could see the future revenue and scalability of what's coming.
Right.
If we can't viably see that, like as in, this will get us into this.
I'm going to go do something really quick. I'm sorry.
You got it. You're good.
Sorry about that. The cat's turned on the vacuum cleaner.
It's interesting. Animals have been getting involved in these podcasts a lot more lately, and I'm actually enjoying it. It's kind of fun.
I have 4 kittens.
Oh my goodness.
3-month-old kittens right now. And
oh boy.
Rambunctious.
Oh yes, they are. They got energy all day for days. It's awesome to watch. So I was just about to get into when we're looking at their plan, and I want your opinion on long-term planning, because I think a lot of people miss that part too. They look at it as like, we're going to go in, we're going to make a bunch of money, we're going to do really well, we're going to get rich. And I look at them and I go, okay, where's your tenure? And they're like, what do you mean? I'm like, where are you at in 10 years? Oh, we'll be doing this. No. Where are you going to be at in 10 years? As an angel investment investment manager, I was the guy that had to go out and go find the right deals. If there wasn't a 1, 2, 10, 5, and 10, it wasn't going to be brought to the partnership. I wasn't going to even let it through.
Right.
There has to be a forward plan. With the one that we're doing now, we can see the forward plan. Plus, they just brought on some new people that are actually successful in that niche that are now putting in time. So it makes more sense for us to do it that way, because we know there's going to be revenue, and it's a niche that once you hit a certain tipping point, the profits are insane. But when you're looking at a long-term plan from an accounting standpoint, what would be some of the best advice you could give somebody as their startup, or if they're already in business, just from those two standpoints?
Well, kind of getting back to what I was saying earlier with, obviously the bigger a company gets, the more people are involved. And I think that when people are forecasting out for 10 years, they don't really take that into consideration. They don't take into consideration that when you hit $1 million in revenue, that's typically when you need to bring in an admin. That's typically when you need to bring in a dedicated salesperson, dedicated marketing person. And there's this terminology, like basically like we call the black hole between $1 million and $3.5 million in revenue, where that's kind of the transition period where you have to bring in all these people, and it cuts into your profit margins in such a severe way that a lot of people have a hard time getting past that. And that's definitely something that just needs to be considered when you are forecasting this out, that it's not just like, okay, well, my profit margin is 40%, 40%. So for every extra dollar, I'm getting 40 cents. Well, right, up until a point.
Right.
And then you need a bigger office. And then you need more dedicated administrative people. And, the salesperson you're bringing in, are you going to pay them commission? You have to really be thinking about like, okay, like what does growth really mean financially?
Agreed. And I think once you get to a certain point, when you're talking about 1 to 3, as far as the $1 million black hole, if you will, because it's interesting. I know some coaches that have said, getting to the first mil is the absolute pain in the ass. That's the place where you learn the most. It's the place where you fail the most, and that's the place where you have the hardest time, in particular with your accountant.
Oh, I definitely agree. I think it's really hard to get to that point, but people tend to think though that after you hit $1 million, it's smooth sailing.
Oh no. Yeah, and then they go, it's not as hard to get to the next from 1 million forward to 5 million. The planning that's involved and the amount of changes that you have to become aware of and really pay attention to. And I'm going to want your opinion on this too. I should say your expertise on this, because when you're talking about making a big change like that, you're talking about a change in commitment of capital. And in fact, this is probably a good time for us to take a short break, guys. We're going to take a break. When we come back, we're going to talk about that. Just when you're looking at scaling a business, there are some major changes that have to happen, and it's not just on the balance sheet. It's in the brain, in the heart, and understanding the emotional part that comes with this. So we're gonna go back to having you be a therapist for a little bit when we come back from our break. So we're gonna take a short break, guys, and we'll be right back. Okay, guys, we're back. So we were just talking about the mental part, the emotional part of making big changes in your business. When you get to that point where you've hit $1 million in revenue and you've gotten your book straight, and we're just gonna go with the perfect scenario, so to speak. And you're there, and you want to go to the next level. You want to get up to that next jump. A lot of the entrepreneurs I know freeze. Not only are they clueless as to what's next for the most part, and there are those that know exactly what they need to do, and they freeze even faster. What's your advice for somebody that's looking at, because you're talking about, one, giving up some control. I know that's coming. Because you're going to have to start delegating and start trusting other people to do stuff. And being able to have more trust in people that are not you. I mean, the old adage of no one does it as good as I do as good as I do is absolutely true. However, and there are other celebrities out there like Gary Vee that talk about this all the time. If you don't give them space to grow, how are you?
Right.
So what's your perspective on that from an accounting
I
standpoint?
100% agree. And this is where, so I think there are two parts to it. There is first the person who, like you said, it's their baby and they took it from here and now it's here and now it's a business. It's a grown-up baby at this point, right?
Yeah.
And letting go of that and trusting other people is extremely hard. But the other side of it is knowing how to hire the right people. Because again, in my experience as with coaching is that hiring is one of the most stressful and one of the hardest things that you can do. Finding the right people, making sure that they're compensated the way that they should be, retaining them. I mean, we're in this this world now where people don't stay as long as they used to, and you invest all of this time and energy for them to leave, and it's just it becomes very, very frustrating. So, we also tend to live in a world where we think anybody can be a manager. If you're competent at your job, you can be a manager. And that's
the 70s and 80s completely disprove that easily.
That's why most managers fail, quite frankly. So if I was going to give anybody advice as to taking it to the next step, one, and this is just me personally, get a therapist. Two,
get a therapist. I'm down with that.
Get business, get a coach, not necessarily a business coach, but get a coach that's going to tell you, show you and train you how to be a real manager.
Right.
And three, have a really good system of hiring, which includes, I would even say cognitive testing, making sure that, the way that they reason through things, that their emotional state, that their, just generally their demeanor fits in with your culture.
That used to be one of the questions in interviews. What's the most stressful situation you've ever gone through and how did you deal with it? I don't hear that in as many interviews anymore. In fact, I don't see that question on a lot of questionnaires. They just put you through the personality test and see, how does this do? What quadrant are you in?
Which I still think you should be asking behavioral questions.
I do too, and only because I think for the most part, we as entrepreneurs, which are absolute control freaks, we need to know that somebody else can be that control freak for us without freaking out. So I'll share this story I learned years ago when I was when I was over at I used to work for one of the Embassy Vacation Resorts back on Maui, and one of my leads used to be the manager of, I think it was a Subway, and no plug for Subway, just said that's where he worked. Just they're not a sponsor, you guys. Okay, just want to make it clear. So he had I guess a shift lead or somebody else that was there, and they were getting inundated. I mean, for some reason they just had a lot of business that day, and all of a sudden they were running out of supplies. They were running out of lettuce, they were running out of tomatoes, running out of everything, and there were still people there. And his lead freaked out, went over to the wall, turned off the lights, and just yelled out, "We're closed. We have nothing left." And my lead was looking at him going, "What are you doing?" I just lost it. And it's like, yeah, the franchisee's not going to be happy about that.
Yeah, definitely next time you're interviewing, don't bring up that story as how you reacted during a stressful situation.
Exactly. If that's your story, I'm sorry, don't talk about it.
Oh my God. But I mean, it is, it's kind of amazing. One of my anecdotal stories is I had a client who, she sent me she was getting ready to hire somebody, and she sent me the benefits package. And it was their first time hiring, and it was just an insane benefits package. It was a decent salary, and then it was a certain amount of hourly billing percentage, and then reimbursing for rent when working at home, and paying for, all of these things. And I had to kind of go back and just hey, I totally understand you want to retain this person, but you need to get their trust first, and you need for them, you have to make sure that this is going to work out before you give them everything, because if you give them everything up front,
there's no value. Yeah, there's no value.
Nothing else to give them.
Yeah,
And then
exactly.
there's this expectation. I was trying to tell them the story of like somebody we hired, it was a CPA, and I had worked with her at Deloitte. She was a CPA on a big client, well-liked, really awesome, and I had no reason to not think it was going to work out. And I ended up giving her everything up front, you know, decent salary, you know, benefits, work from home, pretty much, you know, half the week. And then when, you know, a few months passed, she was like, okay, like I've been doing it, now what? Like, what are you going to give me now to continue, essentially? It was kind of the attitude. And it was like, there was nothing else
to give. Yeah. You don't want to run out of, the road. Yeah. You run out of road real quick when you do that. You don't want to give them the Ferrari right out the gate. They'll get to the end and they'll be like, is there any more road?
Exactly.
Yeah.
Exactly.
And I wish I'd have thought about this. I'd have pulled it up so I could read it for you, but there's an old joke about an engineering student that's getting ready to come out of college, goes to a firm and goes, well, I figure that, you know, that I have my degree now, I figured, you know, 120,000 and maybe some, you know, some insurance benefits. And the HR director's like, oh, actually, we have a bigger package than that. We offer your salary, we get your insurance, we do matching for your 401k. You get a company car, any kind of car that you want. Usually our guys choose a Corvette in red. You get the monthly lease paid on that, and you get a nice office upstairs. And this engineering student's going, wow, I get all that. And the HR starts laughing. He goes, no, but you started it.
Yeah.
So it's like, yeah, be careful with your. So that's a good question too. Then, if you're going to design a benefits package, what are the essentials for a start? What would be the essentials that is enough, that leaves room to grow, and isn't so thin that it makes it a stress on somebody? I mean, I realize that's going to vary from niche to niche.
I mean, I think like the basics for, you know, any new employee is obviously a reasonable salary, health insurance, and the ability to contribute to a 401k. Like those are the baseline.
That's the base.
I mean, you know, vacation time, you know, that I'm a big fan of, kind of starting out a little bit slow there and then working up, like, hey, you make it to 3 years, you get 3 to 4 weeks, you know, that kind of thing. Like, I think that's something to grow into. And then I'm also, when it comes to the 401k, like having that rule of like, you know, hey, we have a discretionary match, kind of that way you can, if you don't have the cash, you are able to say, well, it was discretionary, but also like, you know, maybe that match kicks in a year down the road or something like that. Like, kind of set it up. Same thing with bonuses. Like, I'm a really big fan. Like, one of the best bonus programs I ever saw with a company, they actually did it twice a year. Like, it was for a full year, but they paid it out twice. So if they got it in January, they wouldn't just quit in January.
Exactly.
After they got the bonus, they had to stay until June to get the second half of the bonus. And that went, by that time, you're halfway through the year. Why not stay another 6 months to go through this?
Well, you've probably been motivated enough to run through the full 6 months and just keep working towards a bigger bonus for the next, not for the 1.5 year, but the next annual.
Exactly. But I know, I mean, just on the other side of that though, like, I mean, I learned one thing I really did learn when I was hiring for new employees is I never advertise that we're remote work. We are remote work, but I never advertise for it. Yeah. Because it creates this expectation up front that it's going to be this super easy, like, I don't really have to try a job, or we get a lot of people who apply for it that aren't qualified and I have to spend time going through all those resumes. Like, I never say, hey, this is a remote work environment. And it's just sort of a happy surprise.
You just told me I need to go change one of my job listings. Like, literally, thank you. But it makes sense. I mean, when somebody knows that they're going to be committed to a space, if you will, mentally they have to be prepared that they're going to be held accountable.
Right.
Our accountability with our VAs, we have a different kind of deal for the accountability thing. You know, we have a screenshot that happens every so many seconds or so many minutes to make sure that they're actually on the clock and working. And of course, if they're not, and the screenshot shows they're somewhere else not working, then they get docked time. And they agree to it. I mean, it's like, okay, look, you're halfway around the world. I have to be sure that I'm actually paying you to work and not go hang out on Facebook. So
right.
if I don't see our screen and I don't see progress on the work, I will be asking.
Mm-hmm.
And if we find out it's not happening, you're not getting paid for that time. I mean, let's be fair about it.
Yeah.
Cool. 1 second, please. Loving the allergy thing.
Oh yeah, for sure.
Okay. So when you're using, well, let's just say, if you're going to do a financial analysis of your business, how would you improve that? How would you use that to improve your decision-making process? I mean, what would you, I mean, we talked about KPIs. I mean, as a whole, how would you use that to be able to figure out, yes, we can do the next thing? What other things are we looking at, or is it all KPI based?
I mean, mostly I'm looking at KPIs. That tends to be like how, again, very linear thinker and how I kind of roll.
Is there a sweet spot that is there a sweet spot that you know of that it starts to make sense as far as that's concerned, or?
Not, I mean, not really. I guess I don't have a good answer for that.
Well, the reason I ask that is because there are some people that'll sit there and go, yeah, we're gonna get to this point, and you still need somebody with expertise like yours to take a good, solid, honest look.
Oh, I see what you're saying. Generally speaking, I usually tell people, like when people are trying to come on, so it's a little bit tricky because what I tell people is that accounting fees in general should not exceed 1.5% of their revenue.
Got it.
And for us, again, my goal in life is obviously to help people, but also just to have a good work-life balance. And so I want as few clients as I can.
Sure.
So we have minimums that are in place. So, if you're at $250,000, then you're really probably not going to be spending more than $300 a month. So that kind of falls into a little bit low for us to be taking them on. Not to say we haven't done it in the past, but
Sure.
But generally speaking, I usually will tell people once they have revenue, they should have an accounting system. Like, hands down, that's it. Like, if they have revenue and they have expenses, they need to be tracking it. They can obviously use an Excel spreadsheet, but it's going to cause them more heartache in the end, because once you pass a certain point, you're going to have to move to an accounting system, and then you're going to have to backfill all that information in order for your books to be correct. So usually what I'll tell people is, like, as soon as they have revenue, have an accounting system, even if it's, just QuickBooks Essentials or whatever, Quick Start, the lowest version there is. As far as when to bring in a professional, I always think, unless you are a tax preparer yourself, always have your taxes done. Always. If you're a business owner, have a professional do your taxes. I promise you it's going to turn out in a better situation.
I've done it. I've done it myself. I've literally read through the book, the IRS code that they give out to figure out what I could. I've even gone to Google and YouTube to try to figure out, what are the max deductions. I've never come close.
Yeah.
I just haven't. There's so much to remember.
It's confusing because the IRS says, well, you can deduct if it's necessary and reasonable, or necessary and ordinary. That's the rules. They're so broad. And
then when you get audited and go, well, is this really normal and necessary? I'm like, well, yeah, it is. Why wouldn't that be? Now, mind you, I haven't been audited, but I have friends that have. If I told you some of the stories a couple of my buddies do,
I had somebody who was having their car valeted every single day. Like, they would pull up to their office and have someone go park their car for them, and they wanted to call that a business expense. I was like, that is neither ordinary nor necessary.
No, yeah, you can't, yeah, you can't. But I've heard guys that have actually justified fish food to maintain fish because it's a part of the backdrop that causes calm in the midst of their business
culture.
dealing.
It's the business culture.
And he gets away with it. He gets away with it every year. I'm just like,
That's the other, I've had clients who are like, I want to deduct like my dog sitting expenses, like to have a babysitter. I'm like, but the IRS doesn't allow you to deduct childcare expenses as a business expense. It's a personal expense. So like, why would you think it's okay to deduct dog care? It's not.
Unless your business is a dog care, that's a different story.
Exactly, and then it's a different story. But I mean, so I definitely recommend everybody who has a business have your taxes done by a professional. As far as like keeping the books day to day, I will usually say around $250,000 to $500,000 in revenue. That's kind of the tipping point where things are probably getting more complex, or you're getting busy enough that it is not a good use of your time.
Yeah, I agree with that one. We have a tendency, just within our business model, we have a tendency to deal with companies that are 5 to 10 million in sales revenue per year. I don't know what their net is, but as long as they're doing that, they can afford what we have as far as the data and machine learning that we promote and provide. We've done it with lesser companies. I shouldn't say lesser companies. Sorry. We've done it with companies with lesser revenue that we could see it being a benefit to, but we try to shy away from that. So that's for those of you that are listening, she's talking about putting limitations to what you're willing to work with as far as who your clients are going to be. If you don't understand where they're at, then you don't understand where they need to get to, or versus where they want to get to. That is also a difference too. Would you agree?
Yes. Sure.
If you don't understand those kind of KPIs, if you will, you're going to get into a situation where you have a problem child, like the email every day. Pre-show, we were talking about COVID and how all the craziness is going on with some people. They're just like, yeah, we'll get through it. And some people are like, oh my God, we're going to die. Literally the world's coming to an end. And it's like, no, it's not. Chill out. But if you don't understand the difference between those two and where those are at, you're going to end up with a problem child, for one. You're also going to end up working way more for that client than was actually agreed to. And you're only causing yourself more angst.
Yeah.
I love the fact, and I'm like this too. I love the fact, fewer clients, greater lifetime cash value. Huge proponent of return on customer. Do you ever read that book? I'll send you the title. You will love it. Return on customer focuses on lifetime cash value of a customer. And I think some people misunderstood the premise behind the theory of staying ahead of your customers' needs and providing them with it. Because you just talked about it a little while ago. Well, we wanted to be able to do social media. We wanted to be able to do funnel building. We wanted to be able to do this because it's just more money for in-house. Yeah, but it's also more cost in-house.
Mm-hmm.
You look to get ahead of it. There's other such things like white labeling.
Mm-hmm.
Be an account manager. Let somebody else do the work. We do that with our business while we have the services available. We don't do them all ourselves. And we tell our clients, look, I use somebody else to do this. I'm going to manage it and be the intermediary because there's a lot of jargon that you don't want to have to deal with. Or it's just something you shouldn't be dealing with right now.
Exactly.
We can shoulder that. We'll manage it with them. They'll get the results and we'll go from there.
Exactly.
Yeah. So goodness, guess what? We're already at an hour. I love this.
I can keep talking if you can.
I can. And trust me, we're probably going to need to do this again because there's a lot more going down. We're in an interesting time.
Yes.
And we'll take just a few minutes to touch on this. And hopefully down the road, this will be a subject of the past, but I think it's relevant right now. We're in the midst of the COVID situation. It has definitely affected a lot of businesses. The SBA came out with a couple of programs. The Triple P, the Payment Protection Program, or otherwise known as a Triple P, just got extended.
Yep.
And then there's still, I think the EIDL is no longer available. I'm not sure about that. Do you have any insights on? Do you have any insights on whether somebody should really be going after that right now? And what the ramifications may be, because these are essentially loans, if I remember correctly. I know the EIDL is.
So it's honestly, this has been, so I always make this joke because as a CPA, I have to do continuing education. And you have to do 120 hours every 3 years. And so we have this joke that like Christmas, the week of Christmas, on the third year, I'm like just busting through all of my continuing education.
Just
And
like real
this
estate.
year, like I'm already half done because I keep having to watch these webinars for all of the changes that are happening. And I mean, it's like literally I'll send an email to a client saying these are the rules, and tomorrow I get an email saying these are no longer the rules. And so then we're like, okay, like let's figure out.
Isn't that frustrating? I mean, that just becomes like an inundation of what's the purpose if you guys are going to keep changing things?
It's frustrating for two reasons. I mean, I think like one is the very obvious, and I don't think I fall into this category, but the very obvious, like accountants are very set in their ways, and the whole constant change management it's hard.
Yeah.
But it's also just really, really frustrating because we can only advise to what the current rules are, not what might happen. So like we have, certain people that like, they're like escape rooms, or they are, arcades. They can't open yet. They had this money and they had a time limit. So literally they were like considering just paying people to stay at home because they needed to use the money. Otherwise it became a loan.
Right.
And, and luckily before we kind of crossed that bridge, they made the rule like, okay, now we're extending it out to 24 weeks. And so hopefully now that'll give us time to get to phase 4 in that area, and they can open and use the money as they need to open. Same thing with like coffee shops. We had a few coffee shops where, they were really running on 50%. They couldn't possibly have spent all that money in the time that was being given. So, but, before that I was like, owner, you need to be put on payroll so we can spend this money, because we can only advise to what was currently going on.
Right.
So it was a lot to deal with. And I mean, it still is. And one of the biggest like things that we're currently trying to figure out, and again, keep in mind, this is current as of today, it could change tomorrow, is that they have had this guidance saying that you can't use the EIDL for the same purposes as the PPP loan. But they have made no like rule about whether or not, well, once you've spent the PPP loan and you're now out of that 8-week period, if you use the 8-week period, then can you use the EIDL for payroll? That still hasn't been answered. So I've literally got people who have gone through all their PPP, they have an EIDL, and they're just sitting on the money because they don't know if they are allowed to use it, because if it's found that they use that money improperly, then the PPP loan is no longer forgiven.
Right.
And so like there's just these issues that, like, I mean, I think what I'll say is I think that the government did a good job at trying to respond, but just like anything else, when you're trying to respond in a crisis, not every single scenario can be thought of.
No,
you know what I mean?
I think they're hampered at some points by some of their own protocols and processes, in order to make things much clearer, as you've mentioned. When we looked into it, because we were affected. I mean, obviously, who wants marketing when you can't even be open?
Right.
And we literally had to shift to, well, you should still be talking to your clients, and here's where you should be talking to them, and this is how you should be talking to them. But getting them to realize that and investing in it was still rough. So we took a hit.
Oh yeah.
And we applied for the EIDL. We got a little one. There's only 3 of us, and we're K1 owners.
Mm-hmm.
I mean, we're not even employees of the LLC, and we literally just incorporated last month.
Mm-hmm.
Previously, we were just JV partners. There's 3 of us. So we're looking at a situation where we can't even use the PPP because none of us are on payroll, and we don't have one, and we're not there yet. When that time comes, if it's still available, we might, but there's no reason to right now. And I'm sure there's other companies just like ours that have this same issue.
Well, and I think it's going to get harder too, because initially when they first put out the PPP, they said everybody is going to get audited.
Yeah.
And then they kind of again walked it back and said, well, if you're over $2 million with the loan, then you're automatically going to get audited. And a lot of people took that as like, oh, if I'm under 2 million, I'm not.
Nope. That's not how that works.
That's not the case. It's just not a guaranteed audit. And so that was one thing, like I felt kind of alarmist and I felt bad doing it, but I needed to be done. All my clients that had PPP loans, I was like, please get your documentation in order now. showing why you thought you needed this money. Because some of you may not, like I had some, occupational therapists that, were like convinced that the world was ending. And, when you actually look at their financials, they were actually not affected at all. Really. Like, they spent more money because they had to buy telehealth like equipment, but
that's a one-time expense for the most part. Yeah.
But but I was still like, you know what, in case you get audited, it's more, this evidence is more convincing if it was prepared before than after the audit started. So please have your documentation in order telling us why you thought you were going to be negatively affected. And I think that's kind of one of the problems now. It's like, the PPP is still available, but things are, as you know, for a lot of businesses, not restaurants and cafes and things like that, obviously not where you have to go to it. But I think a lot of businesses are recovering and are seeing more growth. And so at this point, it's like, how would you prove that you thought you needed it at this point? You know what I mean? Because things are continuing to get better and better.
I would only think that the larger companies might still need it due to latency of realizing profits again, because it's going to take them time to reopen. Like you just mentioned, like restaurants, coffee shops, and they're not going to have as long a trail to get back to normal. So I guess it's going to vary per niche. And I commend the SBA for doing what they did, and our government leaders trying to get everything together, at least trying to get some kind of relief for those that are affected. That's cool. I, like you, do wish that they were a little clearer on a few things. And I think the only way, I'm completely advocating for anybody to get somebody that understands this stuff, a CPA, whether that's you or anybody else that has your specialty, to be able to weather that storm and understand where they belong or don't belong when it comes to stuff like that. I mean, even getting an SBA loan, I mean, I've started probably 5 or 6 companies, and I was always told, go get an SBA loan, go get an SBA loan. And I looked at it and I was like, do you see the amount of auditing that they do when it comes to getting an SBA loan and how much you have to put together? I'm not that big.
Yeah.
I'm not going to have what they're even asking for. I'd literally have to hire an accountant to do all of this stuff because I don't know how to do it. And so it's like, it's awesome that there's a resource there. Do you really need it?
Right.
And if you do, are you willing to put the time in and the work in, or hire the professional to help you prove it? Because it's not just sitting down and printing out some QuickBooks and going, oh, here you go. It doesn't work like that. I mean, their audits are.
And that brings up a really good point, which is, don't wait until the last minute. That's another, I think, thing I see.
Oh, there were so many that I've heard that did. Oh my gosh, it was crazy.
I mean, and it's not so much with like, bigger companies, but, small, like one to two guy companies, they don't look at what, I'm not going to generalize. A lot of them don't look at what they don't want to see. And then, all of a sudden they're out of cash and they're like, crap, we need to apply for this SBA loan. And from what I was seeing, it was taking 2+ months.
Oh yeah.
For some of them to even just get to the processed point. By that time, it's too late. They were out of business.
The moment I have a couple of friends like yourself that are accountants. I've literally tried to get them on here, but everybody's inundated. So again, thank you for coming in and sharing some of this. But the moment he heard it was coming, we were on the phone with him saying, get your shit in order and start looking at whether or not this is going to work for you. And if you need it, he says, did you do the EIDL? I says, yes, I did. He goes, good. Did you do the triple P? I says, dude, at this time, I'm a sole proprietor. I don't even make a salary for myself. He's like, okay, then don't worry about it. When you incorporate, we'll talk again. It's too early for us to even begin to think about applying. Much less do I think we should, because at this point, like you said, recovery is happening. We are starting to see some traction. We do have some people that are coming online that are clients. I'm not going to take advantage of something that I don't need.
Right.
Now, if there's other things that are, grant-based or something like that, that might help enhance what we're doing and help in growth and kind of like use it as investment funding. Okay, cool. But I think a lot of times too, people have to be honest with what it is that they're actually in need of versus taking advantage of.
Exactly.
Yeah.
Agreed,
So
100%.
Okay, cool. Where can people find you? Let's get them to where you're at. What's your .com? What's your, are you on LinkedIn, social?
Yeah, for my accounting firm, it's honestbuck.com.
Honest Buck?
Yep.
Love the name.
Yes. It's my entire motto. And then for my coaching business, it's RachelleCalina.com.
Cool. Awesome.
My marketing person has me on social media. I personally am not, for mental.
Oh yeah. Oh no, I got you.
Mental reasons.
Trust me. Running your own social media is a mental drain.
Yes.
As it is right now, I still run my Facebook and Instagram.
Mm-hmm.
The amount of strategy sessions that I have to watch on YouTube just to keep decently current, and the amount of conversations I have with friends that are experts at each of the different niches. Holy crap. Yeah, if you can hire that one out too. So
that will, because I'm not on social media personally, just because
but your brand is
mentally exhausting.
Your brand is. That's awesome.
Exactly.
Yeah. Cool. So I'll have those links up, guys, in the description. And along with some of the points that have been made here, I've been taking some notes, and we'll have that there in the description as well. If you're watching on YouTube, make sure you subscribe down there. Okay. And if you're listening on Anchor or any of the podcasts, feel free to download it, subscribe, make sure you follow us. We got a lot of wonderful experts like Rachelle here who come online and just like give it up. I mean, if you haven't been listening, she drops some knowledge bombs, and there's some serious gold in every one of these things that I do. And it's simply because all we're doing is hanging out over a cup of Joe. That's all this ever is about, guys. If you have questions, make sure you get over to her at honestbuck or RachelleCalina.com. Send her a contact, ask her a question. She'll get to you when she can. And at the same time, if you're looking for somebody that really knows her stuff and you haven't figured out that she does yet, go back and listen to this again. This is Coffee with Mike. I want to thank everybody for hanging out with us, having a cup of Java, and you know how I'd like to end it. Stay up, stay strong, stay healthy, stay safe, but live, and live for good. Love you all. Thank you very much for hanging out. Talk to you guys soon. Ciao for now.